Hi, welcome to Daily Insights That Matter. We begin today's DITM by talking about the industrial growth, which has shrunk to a 4-month low. India's industrial growth, as per the Index of Industrial Production or IIP as we all know it, slowed further in July to 2.4% from 12.7% growth seen in the month of June. At 2.4%, the July industrial growth figure is the lowest in the past 4 months. Now, the moderation was seen across all the three sectors, but the mining sector contracted the lowest since March 2021 by 3.3%. The manufacturing sector, with the largest share in the industrial output index, grew by 3.2%. The electricity output grew by 2.3% in July 2022, which is the lowest in 5 months. The IIP growth moderated to 2.4% on the back of normalization of the base effect and the weaker than expected performance in the mining sector, which pushed down the IIP growth print. Now, despite a drop in the IIP growth, IIP hasn't lost momentum. Due to a favorable base effect, the industrial growth prints in May 2022 were high at 19.6%. However, this favorable base effect is now waning off. But the rising domestic inflation volatility in commodity prices and the global growth slowdown could be the major challenges for the momentum in the industrial activity going forward. However, a comparison with the July 2019 numbers revealed that a 2.1% increase, indicating that the industrial activity has improved when you compare it to the pre-pandemic levels, but it has done so at a slower pace. The inflation levels in the economy remain elevated despite a considerable reduction in the crude oil price from its recent highs. CPI inflation has once again risen to the 7% mark, breaking its 3-month falling trend due to a sharp rise in the cost of mass consumption goods such as vegetables, cereals, footwear, and spices. The CPI inflation has now been above the RBI's medium-term target of 4% for 35 consecutive months and outside the central bank's 2 to 6% tolerance range for 8 straight months. When we look at the breakup, inflation in August was pushed higher by an increase in the prices of certain food items. These included cereals, vegetables, and pulses. Fuel, however, saw a sequential decline in prices, with the index falling 0.4% month on month. Now, the rise in the CPI inflation in August was largely because of higher food price inflation. Going forward, domestic food inflation will remain a concern given the uneven distribution of rainfall, which could impact the Kharif crop production. The inflation levels in the economy remain elevated due to a slight inching up of some of the global commodity prices in the month of August as well, after a steep decline seen in July. SEBI is said to be taking a closer look at the bank-owned AMCs or the asset management companies to understand whether these banks act as a distributor in good faith and recommend mutual funds on merit only rather than the commissions that they earn. Now, if we were to look at the data available, it provides a mixed picture. Some banks have a highly dependent relationship with the AMCs that are either subsidiaries or related entities. Similarly, many mutual funds with associated banks have their sister banks as one of the largest recipients of their distributor commission. Mutual fund distributors, that is a bank, an institution, or an individual, are not legally obliged to distribute the mutual funds of 43 AMCs in India. Now, many distributors, including banks, offer a more limited selection. However, what's not clear is whether these banks only distribute the products of related entities or offer non-recommended AMCs too. While some banks disclose on their own websites the AMC-wise commissions that they get, many don't. And that's what is worrying the regulator. Now, when an advisor is trying to mitigate the AMC risk in your portfolio, they would want to provide 4 or 5 different mutual funds from across AMCs along with 2 or 3 different styles of investing. But as an individual, if you go to a particular bank and if the bank asks you to invest everything in the same AMC scheme, then it is risky, because investing everything in one particular AMC would mean that your portfolio would be focused on only one strategy. That being said, SEBI is taking a closer look at this situation and will come up with corrective actions as and when required, if any, that is. So what does all of this mean for you? Well, compared to the pre-COVID levels, the IIP is up 2.1%. Elevated domestic inflation, volatility in commodity prices, and the global growth slowdown could be the factors driving the IIP down in the near term. This will have an indirect neutral impact on you. Now, we have our reservations on the inflation outlook as there are several factors driving it. However, there is downward pressure on commodity prices due to the global economic slowdown fears, which could give some respite to the domestic inflation. This will have an indirect neutral impact on you. Now, the fact that the SEBI is acting in the best interest of the investors and raising questions on the cozy relationship between the banks and the AMCs is a big positive. The future actions in this direction need to be seen. For time being, this will have a direct positive impact on you as an investor. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.